So limited exposure to Adani, but there are still risks.
Yeah, sure. So for Indian banks, we estimate that their exposure to Adani Group entities, there are many entities in that group, is about less than 1% of their loan book. We think public sector banks may have slightly larger exposures, but private sector banks are slightly lower. And also these exposures are across multiple operating entities, which are also collateralized. So to that extent, we think the exposures are quite manageable.
But when it comes to credit quality, what might impact the credit quality of Indian banks?
Sure. So you're talking about one topic, but leaving aside this, which is a small part of the bank's exposures, we think overall credit quality of Indian banks has been on a mend. We've just upgraded ratings of number of public sector banks about a month ago. We think they're past the legacy non-performing loan issues in the banking system. Indian government has recapitalized the banks. And the economic environment in India is otherwise looking quite supportive. So to that extent, we think their credit quality is on a mend.
Alka, how then are you looking at credit ratings with the Moody, these companies that we've been talking, the Adani Group of companies? How are you reassessing your rating on them?
So first of all, the ratings of Adani Group are done by another line of business. I look after the Indian banks, and to that extent, we think Indian banks' exposure to the group is quite manageable. I mentioned that it's across operating entities as well. Also, our rating group that rates Adani entities, which are mainly in the infrastructure sector, have put out some notes saying that those are in the infrastructure space that benefit from sales contracts that run over multiple years. Those entities are also have dominant franchise. But that said, my colleagues are looking at how, say, funding environment for the entities may tighten. Having said that, the entity does not have a lot of debt maturities until 2025.
Alka, the question has to be surely here, we're looking at governance and disclosure. Do you think that the regulators have been doing their job, or have they been asleep at the wheel? What's your take?
So governance and disclosures are extremely well-established rating drivers and have always been part of our ratings. We think investors or even disclosure standards in India are improving. In fact, when we look at Indian banks, we do think that their disclosures are quite clear. You may remember that a few years ago, the RBI asked the banks to classify a lot of large exposures as non-performing. Disclosure standards in India have improved. I think clearly corporate governance are well-established rating factors. And within the Indian banking space, we do factor in some risk from corporate governance, particularly for public sector banks because of the nature of their shareholding and also on the fact that their risk management practices are a bit modest compared to their private sector peers.